All right. So, okay. Yo, what's good, everybody? Welcome back. Oh, my bad. I forgot. Give me 1 second. All right. All right. What's good, everybody? Welcome back to another webinar. So today I'm pretty much just gonna be breaking down gold and GJ, kind of like how I always do. Now, when it came to gold and GJ, well, mainly GJ, because I haven't traded gold at all. GJ's been kind of consolidating over the last few days. So I've been literally shorting GJ for quite some time now, literally since this wick right there. But GJ just been consolidating, so it's been very tough for me to actually want to hold my positions, especially, after seeing price go in your favor, then go to break even and small loss. So I've kind of struggled with GJ this week, but now after the CPI news release, it does seem like GJ is finally moving in the direction it's supposed to, or the direction I anticipated GJ was supposed to move in, which kind of gets me upset because it's kind of like, holding trades from literally the 8th to now and getting out early, and GJ finally going in the direction I anticipated. It's one of those moments in trading that makes trading very like bitter and makes you kind of like in that weird position where it's kind of like, oh, although you want to trade, it still sucks. But that's part of trading, it's part of the emotions you're going to go through when you actually do trade. Because again, one thing that I've always told you guys from the beginning of the day trading institution is that you can always know how much you're going to lose. That is something that's predetermined before you enter a trade. But what's unpredicted is how much you could potentially make. So when it came down to GJ, there's three main levels that I'm looking at here with GJ. I decided to kind of clean up my chart and really focus on the main levels that we see with more relevant price action. So we're going to be looking from pretty much July until now. So the three main levels that I'm going to be looking at is 161, 100, 163, 900, and 166, 250. These are the three areas that I'm looking for GJ to pretty much bounce along and travel from. So when it came down to GJ rejecting 163, 900, ultimately I started looking to go short because of this candlestick here, this one here as well. So we pretty much had a double top to this 163, 900 area, along with a pullback of 618 on fibs. Although again, I'm going to state this now, I don't use fibs all too often. I wanted to measure the pullback because I was anticipating a new trend to the downside, mainly because we saw a break of support here after a double top pattern. And essentially what I saw with market structure on the daily time frame is we have a high, higher low, high, then we have a lower low. So I was anticipating this entire area to possibly form that next lower high point, which as of right now, it looks like it's doing exactly that. And we could see GJ go back down into 159, 422, or mainly 160 to be a little bit more exact. So with me having all this information, I know the daily time frame we're most likely looking bearish. Now, all you simply have to do is ask yourself, well, how can you take advantage of the opportunity that is present to you? When it came to me looking to actually take this position here on GJ, all it really took was a rejection of this hour resistance. There's a reason why price rejected this area here. And I want to see if price can continue to reject this area again. I didn't take any buys at this point in time at all, because again, I'm looking to go short. If I'm looking to go short, there's no point for me to look to buy. I'd rather just much rather wait for price to come up into resistance and sell at resistance each and every time, which is basically exactly what I did. Now, price is broken under this area of support here. So although on the daily time frame, on the bigger picture, we have a consolidation range, we also had a consolidation range here on this hour time frame. The lows of this consolidation range being roughly 162, 600, the highs being 163, 600. And it really comes down to probabilities. If price breaks above this high, most likely it's going to go higher. Really, I was looking at 163, 900. If price were to break above this consolidation range here, I would look to price still again at 163, 900. But the fact that price maintained under that area of resistance is pretty great on my short side. Now, price has actually given us a nice break to the downside, and we now have lower lows, which shows us clear direction on where price could potentially travel to next, which is definitely 161, 121. This is where I'm going to look for price to travel to over the next few days, next few hours, however long it takes price to get there. But really what it comes down to tonight, what I'm going to be looking for tonight is I want to see at least another retest of this area here, just because this is literally going to be the best trade or the best area to take another trade from 162,600, especially after all this rejection and consolidation towards the downside. This is an area of resistance and an area of significance within this hour time frame. All you got to do is look left to determine that. You can see there's been multiple rejections towards that area. So I would like to take another position from this area. Now, so far, price has already rejected it, and I was a little bit kind of, what would the right word be here? I wasn't too enthusiastic about wanting to take a trade at this specific time in the day, because most of the times when you're going to take a trade, near the end of New York session, price is going to consolidate. I could have potentially been up roughly like 50 pips right now, but I played it a little bit safer, just because of everything that happened throughout here. I don't really want to be taking trades too aggressively. So I'm definitely going to wait for a retest of this area over here, 162,600. If price can give me a retest and rejection such as this one, then that's when I'll look to go short down until 161, 120, which is pretty much where I would be looking to target. Now, if that doesn't happen for any reason, then really I would probably just wait until price gets into 161, 120 to probably look to take a buy if price holds this area, just because there's no real other area of support or resistance that I would really like to go short or long at. I mean, you could look at it from many different perspectives. Like you could probably look to take like a break and retest from this 30-minute time frame. But then the question comes into play, what would the possible risk to reward be? I mean, to even have a positive risk to reward on this specific position, you would have to have like a max 30 pip stop loss. And with how price is moving as of right now, you would probably need more than a 30 pip stop loss if you really want to be playing it safe. You got to look at the average of each and every one of these candles, and the average of each and every one of these candles in the last few hours. I mean, this candlestick alone is 37 pips. So these are all things you have to take into account. So that's why I'd be kind of a little bit worried about taking a position on a break and retest at this area. But who knows, we'll have to see later on what price looks like ultimately. Like I said, again, if this 4-hour candlestick closes, really, I would like to see another retest of this area of resistance. And hopefully it does hold this resistance so I can continue to go short. Anything above like 162,600, I'd probably start waiting to see what would happen, because most likely price is going to go back up into the 163,500 range. Now, when it comes to gold, gold has been a little bit different to trade over these last few days, since why I haven't really traded. I was looking for shorts at this point in time, which I gave a nice sell signal here and then gave another sell signal here, but ended up going to the upside. Along with that being said, prices rejected this area of support multiple times already, but there's many ways you can actually kind of look at this. If we look at the weekly time frame, clearly gold is in a market structure that is overall consolidating. But if we take a kind of bigger picture look at this area right here in specific, what we have is a low, lower low, lower low, then we have lower high, lower high. So this raises the question if this area here could possibly be a lower high point. There's also a lot of exhaustion towards the upside at this area of resistance, which is kind of making me a little bit more cautious to buy here. Now, if you go on a daily time frame and we look at the daily time frame, what the daily is doing, right? We have previous support all throughout this range, which gold did pull back into, and so far it is rejecting pretty nicely, and it looks like it could definitely continue to the downside. Now, you have to keep in mind, you're still trading above this area of support, so I wouldn't look for sells unless price starts trading under this area. The best thing to do to look for sells would be to wait for that clean like break under a retest to see if price can actually hold this area above, and then look for price to come into 1772, 120, which is roughly 150 pips away. So that's kind of what I would wait for on gold. If you're going to be looking to buy, then obviously just kind of wait for the same rejections that you would see like here, here, and here. So take a buy. But at this point in time, I really don't think gold is going to continue to go long, just because you had a price push up 150 pips, even more. This was CPI, but price pushed up 200 pips all the way to 1807. And now we're turning back into the 1790 range. So there's a lot of volatility on gold, and definitely when there's a lot of volatility is not the time when you want to be using tight stop losses, and the time when you want to be a little bit more conservative on the positions that you're actually taking. That's what I would be looking for on gold. You can also look at like the previous daily highs and everything else. You can see that the previous daily highs are around this area here, and price has now rejected this area of resistance and closed right under with this candlestick here. So this is a big rejection candlestick, and it's closed under the previous daily's highest highs, which is quite concerning if you're looking to take that buy position. As of right now, I'm kind of leaning more on shorts on gold back down into this area over here, which is 1777. Let's call it 1777. Yeah. So that's kind of what I would wait for on gold, would be that break and retest to actually go short the downside. So that is going to be it for the breakdown. Let me know what questions you guys do have. Anybody wants to get started?
Hey, Raul, can you break NAS 100, please?
I mean, whenever it comes down to me, like trading pairs that I don't trade or breaking down pairs that I don't trade, I would take it with a little bit of grain of salt because again, I don't trade these pairs. But if I were to take a quick look at NAS, obviously CPI came out to be 8.5% is what the report was stated, which is a great news for people looking at the stock market and the crypto market. So typically when they see inflation's going back down, you're going to see the stock market go up. So with that being said, that's most likely why we saw a big push with NAS because CPI came out less than what it expected to be, which is at 9.1% was the expectation, but it came out at 8.5. So we saw a big move to the upside with NAS. So I'm going to continue to, I would personally continue to look for another move to the upside on NAS, especially paying attention to this daily time frame. We have a big engulfing, which is a great sign for continuation to the upside. Looks like this market structure is holding up quite nicely to look to buy. Price continuing to make higher highs and higher lows. We have a nice clean break and retest setup pattern here. With that being said, I wouldn't look to take a position on NAS because price is currently breaking above the highs. So realistically, what you'd want to do tomorrow morning, because this is a New York session pair, this is stock market, you'd only want to trade it during stock market hours, would be a break, retest, and then look for price to go to the upside. In terms of targets, you have a few targets you can look at here. Realistically, I'd probably look at targeting these next highs over here.
Thank you.
Yeah. Any other questions?
Yeah, Raul, is it possible to be trading GJ during New York? Because honestly, like the pairs are moving. I mean, most of the indices are moving like really weird, and I've been like trying to figure out what I can even trade in New York because I primarily trade New York.
Bro, you could trade gold. Realistically, you could trade anything because the New York session and the London session or the New York session at 8 in the morning is when you have the London to New York crossover, which you'll see extra added volume. And if you look at GJ, it's done almost nothing during London, consolidated and had pretty big moves during New York. So, that's one thing that you could do. You could definitely trade GJ during New York. It's not a problem. I don't see why it would be a problem.
And what's your opinion on US 30 right now? Because honestly, like I feel like for me, like I don't know if like anyone's experiences, but like my strategy is just like falling apart in my hands. Like every single time I place a position down, it just goes back on me, and I'm just like confused. I'm like, whoa.
What do you mean?
Especially like on you, because like I literally went through your whole course again, and I did everything perfect. I'm doing everything to the T, and every trade that I place just like turns back on me. Like, and I can't understand why. I'm pretty sure it's due to market conditions, especially with US 30, because that's what I like trading. But it's just like I'm just like confused. Like the only thing I could really trade now is gold and GJ if I could find an opportunity.
What you're saying you were short today?
Today I was going like on US 30, I was gonna go short.
Well, the one thing with trading the stock markets, you have to take a little bit of a different approach than trading, currencies. These are completely different assets, right? So realistically, you need to spend time with that pair and understand how that pair moves. But when it came down to today, like you should have waited until after the CPI news release, right? Because if it would have came out higher than expected, then the stock market would have plummeted. Now that it came out lower than expected, we see the stock market, US 30, SP 500, NAS skyrocketing, right? So when you have like news releases like that, you got to keep in mind, you need to wait for those news releases to be released because market structure, technical analysis isn't going to be respected most of the time. You have to take fundamentals into account. But realistically, like when it comes down to trading in general, right, you have to follow the core principles, at least of supply and demand and price action, identifying the trend of a daily 4-hour time frame, then looking at your major supply and demand levels and taking a look at what price action looks like at those supply and demand levels, like this to me here, right? Looking at all of this, right? Once you'd have seen how sharp this bullish move is, you should have been looking for buys the entire time. Essentially what you're trying to do is you're trying to pick a top, right? In a very strong bullish condition. So what do you do when price is going bullish? You only look to buy. Where do you buy at areas of support? How do you identify areas of previous support and resistance? You start by clearing your chart, right? And then you look at your major areas where you see your major rejections. First area I can identify off the top of my head, or just, I mean, not the top of my head, but just looking at price action, the first area is here. second area is right here, then you can have a third area being, call it like, maybe forget these two price points here. Call it maybe something around here, and then you only wait to look to take setups in between these levels, right? And that's on your major time frames. You could break it down to like an intraday time frame and then look for these intraday levels as well, and only take trades based off of these intraday levels. You know, like there's so many different ways you could trade, but ultimately the concepts have to be the same. If price is going bullish, only wait to buy at support. If price is going bearish, only wait to sell at resistance. You know, that's kind of why, like with GJ, the best place for me to look to take a position would be the previous area of resistance or support that price just broke under. And I'd only be interested to trade really inside of this box right here. And I'd only be able to look, or not only look to take a position inside of this box here. If this box doesn't, if price doesn't pull back up into this box, then I don't have a trade, and I'd want to wait until price gets to the next box, which for me is down here, to want to look to take a trade.
Are those boxes a certain distance, or you just kind of like drawing the boxes anywhere?
I'm just drawing a box so you can visualize a supply and demand level.
I got you.
Yeah.
Okay.
Yeah, I've been trading US 30, and I seen the buys right before they the CPI news, but I was trying to wait, and then I was getting my daughter ready for school, and I let her watch my phone, and so within that 5-minute candle at 8:30 on US 30, bro, it went up like
40.
bro. If you didn't get in on that, the move was gone. Like literally that 5-minute candle on US 30.
Yeah.
And yeah, so
you know,
I mean that was your move. If you wasn't in before the CPI news, it was over.
Yeah, you were done. But also then you have the risk of already being in on the trade before the CPI news release and price taking you out for liquidity grab and then flying in your favor.
Yeah.
You know, there's again, whenever you're doing something in trading and in life, you're gonna have a risk, you're gonna have the reward. You're gonna have to look at the risk and determine if that's a risk you're okay with taking versus, you know, the potential reward. Like when it came to me in CPI, my GJ positions, I knew I was perfectly fine taking the risk that I was taking because of the potential reward. Now, again, like, and it comes down to like, you have to be like on top of your game as much as possible. Because I was asleep and because I wanted to get an extra hour of sleep and I was already in the position, I saw it as a swing trade. I literally just costed myself tens of thousands of dollars. I was in 75 lots around this price point here. And imagine price right now is 140 pips in profit. So that could have been an extra $80,000 that I literally missed out on. And I ended up closing at a $40,000 gain. Why did I close so early? Because I have a problem when I look at price and I just wake up, right? I make a decision on the fly. And because of me holding this position, because of the fact that I held this position for so long, and it's like now I'm finally in profit and I'm up 40K. It's that anxiousness of not wanting price to come back against me, and I close the position just because of closing the position. Now, my main reason for closing the position early was because of CPI. I mean, this would have worried anybody, right? You see this huge move to the downside and then price pull back this and then more, right? Imagine here I was probably up almost 100 grand and then price pulled all the way back up to here. So again, these are all like psychological things that traders are going to go and come across, and all the emotional factors that could affect the trade. You know what I mean? So again, everything has a risk, everything has a reward. I ended up wanting to secure that $40,000 a day. I did, and I missed out on the next, literally tens of thousands of dollars because of it. And these are decisions that you have to be okay with, you know, before you end up putting an action behind your decision. It's the same thing with somebody who's over leveraging their account. You know, you have the chance to lose 20, 30, 40%, but you have to be okay with that decision if that's what you decide to do. There's that possible risk, there's that possible reward. You always have to look at it from both sides of the spectrum.
Yo, Raul, I got a question, bro. Like, so I had passed phase 1 on my challenge and was in phase 2. And I had went on a bad losing streak, really, and then I kind of found myself like a little eager to pass it. So I think I was over trading a little bit, I feel like, bro. So like with that, like, do you trade like Monday through Wednesday or like certain days of the week?
I trade Sunday through Thursday.
Okay.
I trade Sunday through Thursday.
Bro,
That's normal. That's a normal emotion to want to make your losses back. And especially with like the funded companies, you wanting to reach your objective and get funded as, fast as possible. That's why like you got to go through the emotional struggles of trading on a regular normal account first and make money on that first before you try and go into a funded. You have to at least try and go through that on a live account. So it eases the process of going to a funded. Because now you have the extra added stress. I need to make this much by this many days or I fail. Literally.
Raul, question. What would you recommend? Because like you said, like you got to go through like a lot of like these like phases through trading, and like the phase I'm going through right now, it's like everything that I like knew is like everything that I knew about trading. It feels like I just completely white it out. Like everything's like mixed in and blurred for me. I feel like a month ago I was getting these positions like pretty like I was like marking my charts up like clearly I could see where the market was going. But now like every time I've gone through like the entire DTI code, like I've put everything in like perfectly, I feel like, but everything keeps turning back on me and it just doesn't make sense to me.
You gotta understand also, like, that's something that's normal in trading. Even me, there's times, I mean, to this day where I just feel like I may take a loss and I'm like, damn, do I really know what I'm doing? You know what I mean? And that's normal. It's part of the trading game. That's why trading is one of the hardest careers to possibly get into, right? Because you have so many different added factors. You have changes in market conditions. You have to be able to adapt, more importantly, at the end of the day. And if you can't adapt, then you're going to be left behind. But when it comes down to that, honestly, one thing that you could do to try and reset your mind, your psychology, whatever, is maybe not trade, but look and analyze the market every single day and make hypothesis on market direction. Do that for the next few days, maybe the rest of the week, right? By then, the market should have moved long enough, depending on what time frame you're trading, the market should have moved long enough to where you could start to see things a little bit more clear and kind of let that market condition kind of like pass. You know what I mean?
Yeah, but what would you recommend for like because I have been doing that, like I've been trying to do that like as much as I can, and especially with the replay feature in TradingView, like I just like pull my chart all the way up and scroll to like a random time frame, right? And I try to trade off of it, so it's like it's not has nothing to do with current market conditions. It could be like 2021 that I'm trading, right? But like, what would you? Because like I have like the obviously like all my confluences down that I look for, but what would you say I should do to like really start like perfecting and chiseling the strategy other than just back testing it? Like would be
Understand
like
your foundation. You got to understand what your strategy is made upon, what the foundation of your trading strategy is. Really look over your trading strategy again. And in terms of like redefining it, you have to understand why you're taking these trades. So why are you, what's the foundation of your trading strategy?
okay. The foundation, you're asking me the question?
Yeah, I'm asking.
Yeah, the foundation of my trading strategy is basically like what I basically am doing everything that's like in DTI. So it's obviously just price action, right? So
Well,
like
price action isn't the foundation. There has to be like a core principle to your trading strategy. You should be able to answer that pretty easily off the top of your head.
Supply and demand, bro.
Supply and demand. You said it right then and there. The foundation that I teach in the day trading institution is supply and demand. Why supply and demand? Because that's the way the world moves. That's the way the market moves. That's the way all markets move. It's all based off of supply and demand. But it is the one and only thing that makes the most sense, right? If I were to tell you, why do you trade fibs? You answer, oh, because when price comes to this level and it should go down to that level. That's not a valid answer, right? You have to understand why you're trading the methodology that you're trading. So when it comes down to supply and demand, and again, this is the reason why the markets move. I can go more into it and be like, oh, at supply and demand levels, you're going to have liquidity, you're going to have buying and selling pressure. But more importantly, it comes down to supply and demand is the way the markets and a lot of these markets move, the majority of the markets move independently, right? So that's the foundation. Then you add other principles such as price action, market structure, moving averages if you'd like, but the foundation of the methodology is supply and demand. So what you need to do is make sure your foundation is set up and is properly, I guess you could say, like built. Because if your foundation has cracks in it and you can't understand the core principles of supply and demand and identifying your major supply and demand areas versus your minor supply and demand areas, then the rest of your trading methodology is gonna crumble because you can't even understand your own foundation. You know, it's just like building a house. If you build a concrete house on like a wooden foundation, it's gonna fall apart one day.
I mean, it's honestly like the supply, because from what I recall from DTI, in the videos, you mainly would mark the supply and demand levels at like the very high time frame. So like say for example the weekly, right? It'll be the swing high and the swing low of like what's on your chart, right? So those all marked down with a box, and then between those like levels of supply and demand, you find your intraday levels through the daily, which you would mark with the like horizontal array, and you like write down the price and then like a D for the daily. And then in between those daily timeframes, you could also find like hour levels and things like that, right? It's just, to my understanding, and the reason why I get confused from the supply and demand concept. I understand the concept because obviously those like the most major levels of like that specific market, and obviously once it's broken, then you have to define the new ones. But the levels are so far apart that from like an intraday trading like perspective, how would I even take advantage of those levels? Because sure, like to say I have a level at the very top, right, that it's approaching, right? But if it's not there yet, can I even trade off of it? How do I position myself off of some? Oh, let's say if the market's in between both of the levels, like at a 50%, how do I position myself to trade off of levels that aren't even relevant at that point, like at the moment, and will take days or weeks to even be relevant?
So I'll give you the example here on GJ, right? So with GJ, I have 3 levels that are the most important: 161, 120, 163, 900, and 166, 250. I already know that if GJ continues to consolidate in this range, if price rejects this area, most likely it's going to come into this area. So I already have a target for where price is going to head to in the long term, right? Because I'm looking at this from a daily perspective. Vice versa, if price rejects this area, then it's going to come and down into this area. So on an intraday time frame, what I could do is look to take trades off of those intraday levels, but only take trades in the direction I anticipate price to head in the long term. Same thing if GJ were to break 163. If GJ were to break 163, I know it's going to travel up into 166. And this is the hard part about trading, is how can I capitalize off of this opportunity? This is where you look for your intraday levels and you trade off of those intraday levels. I can literally give you the example right now. When it came down to GJ, I was looking to take trades off of 163, but the intraday level is right here at 163,500, not 163,900. So I only shorted at 163,500, and this is an intraday level. And it took quite some time for price to break out. But then you could also look at it. Price just broke this intraday level, 162,600. I still know, because you never want to use the word no, I believe, and I have a hypothesis that price is going to go down into 166, 161, 120 because of the way it's shown us and consolidated on those daily timeframes, right? So me having a daily perspective, my daily target is 161, 120. I'm looking for price to continue to go down. Then I ask myself, how can I capitalize off of this opportunity on a shorter time frame? Well, the principles apply. They're still the same. The hour time frame, here's support. Price has struggled to break this support literally since the 8th. Price has now broken the support. I'm going to wait for the retest of this support to then look to go short back to 166, 120. If we're up to me and I didn't fuck up like I did today, I would still be holding my short on GJ, but I just so happened to fuck up. If I was still holding the shorts, then I'd be looking to scale into this position by shorting here and then looking for price to come down into here. Now, again, the concept stayed the same. If price breaks above 162,600, then most likely price is going to come up into this area here. And then you want to have that if and then thought process when it comes down to really any time frame. You want to identify your market structure levels. You want to identify your supply and demand levels on those time frames. You're going to have 3 levels. If price is trading here, it's either only one of 2 things are going to happen. Price is going to break under and go to the next level. Price is going to reject and go to the next level. You have to hypothesize and try and find a way to capitalize off of that move. That's when we look for setups. You have your break and retest, double bottom, double top, blah, 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 whatever the case might be is, right? But again, you know, if price breaks this level, then where could price travel to next is how you want to start, right? Where is price trading at? Where could it possibly trade to next? You understand?
And yeah, so to like recap, so basically it's like, it's, how do I explain? It's like every level gets condensed or like more refined and refined through the time frames, right? So from the weekly, it's the most like how do I say, the most like raw version of like any of the levels, because it's just major levels, and you have your intradays, which are those white lines, and then off of those intradays, you condense it into levels that you could trade off of that day, because off of intradays alone, and that's what I was doing before, like you'll never get in a trade. You have to wait all week,
It
right?
depends. It,
Sometimes.
it depends, because you could have looked at it from this perspective, right? Throughout this consolidation range, you're talking about this was 90 pips. So every time I shorted, right, and price came to here, I was still holding because I was anticipating the break. And especially after seeing this candlestick, that's like, oh, it's a clean break to the downside. But then price would come up and I closed here. Then I shorted yet again when price came up to here. And then this is when I held the position throughout the entire consolidation range. And I did wait a few days. And obviously I waited throughout, you know, all of these hours to take another position. But do you really want to be taking every single trade that you see? You're
Nah.
just costing yourself how would I
Anguish.
say this? You're causing yourself anxiety and stress by taking every possible trade that you see, and you're not taking the quality setups possible. This is why, as you know, you evolve as a trader, you're going to be taking less and less trades because you only want to take the cleanest setups. And when it comes to my trading career, I've been trading way less because I'm only focused on the more important moves, the moves that I see have the highest quality. But back then I was only making $1,000, $2,000 a trade. Now I'm making 40, 50, 60 grand a trade. And it's all about leveling up and understanding where you want to put money behind, what's worth taking risk, you know, and you could look at it even just a perspective from, you know, life in general. Is this risk really worth taking for the possible reward? You know, every trader is going to tell you something differently. Based off of my experience and what I've seen increase my profitability is only focusing on trades that are going to make me big money, realistically, because those trades are high probability trades. There's been times like earlier this year where I'll take trades going to drawdown. I'll probably lose 5, 6 trades in a row, but then I take that one trade that makes that loss back plus way more. You know, it's all about finding those high probability setups and only trading those high probability setups.
Would you say it's like it's more reasonable to sacrifice wanting to get into like a position a day and just wait for that very, very high probability position? Now you'll probably end up holding for like, you know, a day or two, right?
You know, that's the current position that I find myself in, because I look at some of these trades and some of these moves that I'm trying to catch, and I understand that it may be a little bit more on the swing side of things. But
yeah,
let me ask you what you think would suit you better. Would you rather take a trade from this point to this point and then have to look to possibly re-enter later on? Or would you rather take a trade from this point to this point? You know, this is your probable risk. I mean, this is your probable reward versus this being your probable reward. Where are you going to ultimately make more money?
on the right hand.
Exactly. So are you comfortable with looking for this every single day, or would you rather just take this, you know, maybe once every 2 or 3 days?
Yeah.
You know, because for me, the hardest part about trading is actually getting into the market. Once I'm in a trade, I go to the beach. I'll be sipping mojitos all day. I'll be chilling, right? I know exactly where I want to take my trade versus the stress and the anxiety of, I got to wait for exactly the right moment to get in, especially when you're trading bigger lots, right? Like when you're trading 75, 80 lots, bro, I'll be down $8,000. I'll still be, I'm down 8K. That's funny. Yo, look at this, bro. I'm down 8K right now. I'll put it away and come back at it later. You know, like that's the type of mindset you have to be when you're trading big money. And ultimately, it just comes down to whatever suits your personality at the end of the day. Because some people will be perfectly fine getting in here, then getting out here, then getting in here again, then getting out here. I can't do that. Like I see bigger money, you know, catching this move versus catching 10, 20 pips a day. Because imagine like I can catch one move that I caught 150 pips, make 150 grand versus a scalper that caught, I don't know, in a span of 2 days versus a scalper that caught 40 pips in 2 days and he only make 40K, you know? The scalping is definitely way more stress. That's why every scalper you look at has gray hair, literally. You'll be in their 20s. Like, what the fuck? Right? Versus, you know, me personally, what suits me and what works best for my lifestyle, because I like to live my life. I like to set my trade, go out and do my thing. Just like when it was my birthday yesterday, I was on the boat chilling, looking at my trade up maybe like 20 grand before it pulled back on me. not have to worry about re-entering the market because I know my stop loss is up here. If price hits this point, I'm wrong anyway. So why am I going to stare at every tick on the screen, right? I'll come back to the trade, check it every few hours or so and live my life on my own terms. Because I got into trading to live life, right? I didn't get into trading to trade for a living,
Yeah.
So really it just comes down to you, honestly, and what's comfortable for you. I was just trying to show you my perspective on things. 'Cause at the end of the day, we're both different people. We
Yeah.
both have different goals and everything.
But would you, sorry that I keep ramming, like keep asking you so many
No,
questions,
bro, you're
but
good.
is that like, cause how do I say? Cause my, like to say my mom, she does options, right? She has like a pretty big account on options. She always asks me, like, why do I do options? Right. But like, cause like the reason I even do Forex is because like my mom risks like what, like she'll risk like $20,000 in a day to make like 15K. It doesn't make sense to me. It's not
Yeah.
even the one, right? But it's a lot safer. But they
I
say like,
mean,
go ahead.
it depends because options trading, I feel like it's so much different from, a lot of what
100%.
people are, from a lot or what a lot of traders are doing. Because I'll see options traders like obviously like, I'm interested in all type of trading. Doesn't matter. If you're a trader, I'm interested in what you do. So like I'll look at like I'll give you an example. I was watching one of my friends, his YouTube videos today. His name is Noor. He trades options. I saw him trading Tesla, and bro, they were like cracked out looking at the 1 minute time frame, but he ended up making 60 grand. But at the same time, I saw him take another trade and he was down like 25,000 at one point. The trade recovered. He was up 15K and closed. And in my head, I'm like, you were just down 25K, but then you close out 15K. Like that type of trading doesn't make sense to me, but for some people it works. This is the type of trading methodology that suits me and my personality. Everybody's different, right? Every trading methodology is different. It doesn't matter. What matters at the end of the day is if you come out on top and what you're comfortable with trading. Because I can give you a high risk trading strategy with a great risk reward potential, a high win rate, but it just doesn't sit well with your personality. It doesn't suit you and your needs as an individual or as a trader, right? You got to find at the end of the day what you're comfortable doing, right? If you like trading cryptos, you're going to most likely have a very different approach than what you're trading with currencies. If you like trading commodities, you're going to have a very different approach than what you're trading currencies. If you're trading currencies, you're going to have a very different approach than if you were to trade stocks or options,
Exactly.
It's all
just
different.
It's like I mean, because with options you could like they hedge all the time, right?
Yeah.
It's like a lot safer. That's why like the risk to reward doesn't make sense. Because like I mean, you talk about it in your course, like nothing under a 1-on-1 makes sense.
And at least in my ideology and a lot of people's,
I'd say
does,
most,
right?
almost every Forex trader.
I would hope so.
Yeah,
And
because
I mean, like,
Forex,
thing is like, I don't know, because you'll have traders that like trade commodities, right? And they trade at negative risk reward ratios, but they win 85% of the time. So they're going to come out on top, right? But
Mhm.
then you have different type of traders where they win only 40, 50% of the time, but then they're catching stupid moves like a 6-1, 7-1 every time they win. So it balances out. At the end of the day, like, I don't feel like there's one right way of trading. I just feel like as long as what works for you, that's what's more important, what suits you, and it's cool. It just
Mhm.
depends on the individual, because
would you say like because you know how like you said that you would like in the example where you showed the left hand side and the right hand side, like would you rather catch like a 40 pip move or like an 120 pip move, right? Sure, and the 120 pip will take you like 2 or 3 days, but instead you don't have to be trading for 3 days like on back to back, right?
bro,
Is that methodology better for, would you say that that's more of a methodology for like someone at like your like level of accounts where you want to just be getting in on like positions that will pay you off for sure since you're risking so much capital? Or is that an ideology that someone with like a funded account or even a smaller like personal funds account should be taking into account?
thing is like, to me, it all depends on like the market conditions, right? Because if we look at this move here, we could see it clear as day, break and retest. I could have said, yeah, I'm going to short here, look to take off here, and then possibly hold to down here, right? And then from this point to this point, that was only 3 hours. That's 150 pips, but from this point to this point, if I would have gone in at that same day, I would have caught 200 pips in 3 hours. Really, what's more important to me is not necessarily the time. It's unfortunate and it sucks that I was stuck in consolidation for 18 hours. But what's more important to me is the move itself, right? The probability behind the move. Ultimately, it's going to depend on your personality and your patience level. I would love to get in and out, within the next 5 hours, really. But really, I just look at risk to reward. I don't really look at the pips. I just look at risk to reward. It could be I'm risking 40 pips to gain 250 pips, or I'm risking 30 pips to gain 60 pips. And it depends on market conditions, and that will determine how long I hold the trade for.
Okay.
But
So if
me personally, like, I like to try and get the bigger moves because I get more risk to reward.
So if someone like trading US 30, like would it be normal for them to like hold like the position for like over a day? If you're trading US 30, for example?
Bro, I mean, there's people that trade and hold US 30 for weeks. There's traders that position trade, there's traders that swing trade, there's traders holding US 30 from buys down here still. Right? Like I was talking to this one trader who he started off with options and now trades Forex. Bro, he calls a short-term trade like 3 days, right? And his average trade is like 2 weeks holding. It's a very different methodology of trading, right? But he's managing millions of dollars worth of capital. And if he were to be day trading, commissions would be very expensive. I mean, I'll tell you right now, in the last, week of trading, I've paid, let me see. Not even the last week, probably the last like 4 days of trading. I've already paid $13,000 in just commissions alone.
Jesus
So,
Christ.
Imagine,
That's crazy.
Again, like, there's no one right way of trading, but you just got to find what suits you, and that's what takes time.
Yeah, I guess it's just more chart work that I need to be doing.
Yeah, bro.
I got a question for you, bro.
Yeah.
So like once you learned your strategy, I remember you said you back tested and you did like 500 trades, on the rewind tool and everything like that. I'm to the point where I feel like I got the strategy, my psychology's there, like I'm not really tripping when I'm in trades or anything anymore. But like once you got to that point, what do you think was like the hardest part for you to become, I guess, profitable? Like, was there something that was still like in the way? Like once you got your psychology good and your strategy good, like, cause like starting from, say I'm trying to stick to your script, like I'm trying to put in only $1,000, right? I'm trying to get to 10% for the next 2-3 months, just proving to myself that, I could take this FTMO challenge and get right. Like, what would you say your biggest like deal was once you mastered your strategy? I won't say mastered, I say you got consistent with your strategy and your psychology. You weren't worried about blowing your accounts or anything like that. Like what was the thing? Just being persistent? Like what would you say?
Honestly, what took me and my trading to the next level was just really controlling my emotions in terms of like risk and understanding risk to reward. Once I got those concepts down, then you don't really realize you're profitable until you look at your P&L and you're like, oh, fuck, I made this much this month, this much this month, this much this month. I'm finally consistently profitable. You know what I mean?
Yeah, because I'm looking at it like, all right, like today, for example, I was in a trade with UJ for like 2 days. I'm waiting, 2 days. And then the news comes out and it just goes way against me. You know what I mean? I'm like, well, if I'm waiting for these high probability setups, with a smaller account, it just takes so much longer to, become profitable when I'm waiting for them big risk to rewards. You know what I'm saying?
It doesn't take longer to become profitable. It just takes longer to make more money.
Right.
Because like I said, I can make 20% a month on a $1 million account, and you can make 20% a month on a $10,000 account. We're both making 20% a month, but ultimately I'm making more money because I got $1 million in the account,
Thanks.
So consistent profitability, just making a return on your investment. Now, how
Right.
much you make will be determined by how much you have in your account.
Okay. Have you ever gotten to the point where you were like impatient though with your strategy? I know we're waiting for them high probably setups, but like, were you like, it's tomorrow or the next day? I'm not trading today.
Of course, bro. I mean, we're all human at the end of the day. We all go through the same emotions. Just because I'm at a certain point in my trading career. It doesn't mean that I didn't go through the same emotions that you guys are feeling. I went through probably the same exact emotions plus way more. We all experience different types of like emotions and pains and struggles when it comes through trading because, somebody in a very blessed position, let's say he has a lot of money, right? He gets into trading, bro. He could lose tens of hundreds of, I would say tens, hundreds of thousands, if not millions of dollars, and eventually quit or continue and, make all that back plus more versus somebody who maybe doesn't have as much money to the name, but they're only losing, a few hundred or a few $1,000s at a time, so I'm glad I went through those emotions earlier on when I didn't have as much capital as I do today. So I'm not taking those huge losses that I would have been taking now.
All right, bro. Good luck. Good luck.
Yeah.
Happy belated too, man.
Huh?
Happy belated.
Bro, what does that mean? Everybody's been telling me that.
Happy
Bro,
belated, like happy birthday. Like happy birthday, it passed.
Like happy late
belated.
birthday. Okay,
Yeah,
okay.
happy
All
late
right.
birthday.
All right. Thank you, bro.
Heard
Thank
that?
you, bro. I've been seeing so many people text me happy belated. I'm like, what the fuck is
Bro,
that?
you
Actually,
never
thank you,
heard
bro.
that before?
Huh? I swear to God, this is the first
What?
time in 24 years I heard that.
Bro, yeah, that's what.
I don't know what that was.
A few
I had no idea.
after your birthday.
I had no idea, bro.
Bro,
I had
all
no
right,
idea.
quick question for you. Bro, so the thing is, like, sometimes I've been trading US 30, and sometimes, like, I know, like, you just usually kind of like basically just on the break and retest, of your, like, if it breaks structure. Like, are you waiting for like a touch or like even if it gets close to it in reverse kind of type thing?
I mean, it depends on the setup, essentially.
All right, like that. All right, right there where you got your screen at, that third candle.
Well, here, my entry was here, right when this candlestick closed. That's when I started entering.
Okay, but okay, so that's the 1 hour, so that rejection.
Yeah. Ultimately, it depends on how aggressive I'm feeling and, what type of level we're trading at. There's a reason why, obviously, I didn't take a trade on this candlestick. One, because of time, and two, because I wanted to see that price rejected it a second time. I'm being more patient with that. Because it's an intraday level. I know they're not as high a probability as trading, these big levels. So you gotta remember, it's all a zone, So when it comes down to this level, I want to see price at least pull back and reject this zone one more time before I'm like, all right, shorts, 90 lots,
So
I got
you
you.
look for multiple rejections?
It depends, right? Because when I saw this, I didn't take a trade. Well, then when I saw this, then I took a trade. I took a short here again, but price had already rejected here, right? Because there'll be times where this happens. I take a trade, liquidity grab. Oh fuck! I just lost money for no reason. You learn from your mistakes. Took a trade here. I mean, it just depends. Like, what I'll do is I'll take an aggressive trade here with like my biggest lot size because then I get to lower my risk. Well, not lower my risk, but I have a decreased risk because although my stop loss is here, my entry is here compared to like down here, and I'm able to risk a little bit more in terms of like stop loss, right? So I'm able to use a little bit of a bigger stop loss, but risking the same 15 grand or whatever the case might be is, right?
And making less.
And making more in turn. Because
Or
if
like-
I were to wait for the confirmation, right, and I want my stop loss to be here, right? If I trade a little bit more aggressively, right, my stop loss my risk, I could still risk the same 15K, but then I have a bigger stop loss, and in turn, I could make more money, but I'm trading a little bit more aggressively. Then sometimes what I'll do if I really see like it's a great setup, I'll enter the first position. Like, let's say this is my stop, just random example. I'll enter the first position very aggressively, like with my biggest lot size. I plan on going in with, say, 50 lots. Then when price starts to show that it's most likely going to go in my direction, okay, I'll dumb it down, maybe like 25 lots, something smaller. You know what I mean? But by then, I'm still risking maybe the same 15, 20,000 that I'll normally risk. But, I make extra money on top when price does hit my target versus entering 75 lots right here.
Mhm. So you so you see like in like the first rejection to like the left after that big one where like the price dumped, that first rejection on that orange line. So you wouldn't have gotten on a trade there mainly because like you want to see more of like that selling pressure and like verify like there's like that there's gonna be like major rejections off of there.
Mainly because the zone that I had wasn't very defined, because it was this entire area that I was looking at. 163,900 to here. So it's like, you know, I really want to be as conservative as I possibly can and wait for like a nice rejection, right? Where there's defined selling pressure, because although this is a rejection here, yes, the candlestick itself isn't a candlestick where I'd be like, shorts all day, 100%, versus this rejection or this rejection here. So ultimately, it just depends on the setup. But I didn't like how the zone wasn't as defined. But once I had this already crystal clear cut, right, it was a lot easier for me to take this trade with more confidence because of this area here. And that's how I like to trade. I like to get into I like to trade as close to the zone as possible. I don't mind maybe taking extra losses by trading so aggressively, because I know the risk reward will compensate, you know? I mean, imagine if I was still holding the position, I think my stop loss is like 25 pips. If I was still holding the position, you know, from this point to this point, I was up 7 times my risk. And that's, you know, a pretty big move. And if I would have continued to hold from here to here, I would have been up almost 10 times.
Yeah, bro. So that's the thing. Sometimes I feel like I probably get a little eager to trade. I've been trading US30, and sometimes it'll like fly away from that zone so quick. I kind of miss out. Like it can happen quick with like US30.
I mean, the same thing is happening to me right now on GJ. Like, I want price to pull back to here as much as possible, right? But can that really happen? Yes. Does it look like it's going to happen? At this point, I'm not sure if it looks like it's going to happen. I mean, it could double bottom out here and then go back up into resistance. Then I could look to sell. But at the same time, I think about when I'm in drawdown, right? When I feel like eager to get into a trade, is it really worth losing $25,000 right now? Half of my profit from earlier today? No, it's not. So I'd rather just hold it out and wait for my setup, you know?
What's
So
up,
you
Raul?
got, I know it's been a while since the webinar. I've been on webinar a little bit, but so you kind of trade from like support and resistance levels. You just trade from zone to zone.
Only.
Raul,
Yeah,
I
I'm
have a question.
that approach.
Yeah.
So I got on I had like a bias on UJ earlier this week, and I probably entered the trade like on Monday, and the same thing that happened. Like I saw bullish engulfing on the H4, and the same thing how price consolidated on GJ happened on UJ. So I was in the trade I was holding it for about a day, and up until like the next US session. So I started to see like, cause I keep analyzing. Once I'm in the trade, it's like I keep analyzing, but I don't try to like, paper cut my account. So I just
Bro,
want
that's
to.
the worst, bro.
All right. So say like you're in a trade for about a day or two and you're holding, and then you start to see price kind of transition on like another time frame going against your bias. Like, cause I get my fault, but I'm gonna like I just let my stop loss get hit. Like that's what I have my mind set at. Like, okay, if I'm gonna lose, just let my stop loss get hit. But if I see price transitioning in my head, sometimes I'm like, okay, should I close my trade and then switch my bias, or should I just leave and let it play out?
In terms of your stop loss,
No, not in terms of my stop loss, in terms of like price action and where the trade is like playing out at.
well, yeah, of course. I mean, you want to kind of sit on your hands as much as you possibly can once you enter that trade. Because remember,
All
like
right.
you set your stop in an area where you determined it was wrong, right?
Yeah.
I mean, I could give you the same example. My entries were here. I set my stop losses around this area here because I knew if price were to come all the way up to here, I'm most likely wrong and price going to come up to here. So I'd rather close my trade early and then get back in here if price does reject this area here. Look at the drawdown that I have taken. It's not much drawdown, but it's drawdown, you know?
Yeah.
And remember, at one point in time, this was a fat bullish candlestick with no wick to the upside, not showing any signs of slowing down. So I could have closed early, right, and paper cut in my account and gotten back in after it closed, started trading back under. Then I would have just incurred loss for no reason versus, fuck, you know, if I would have just held my trade, you know, I'd still be in profit.
Yeah.
And then again, price pulled all the way back up and then it dropped. And then again, price pulled all the way back up and then it dropped. Again, sticking to your stop loss and sticking to your plan ultimately is what's going to put you to that next level. Really trusting in your analysis.
All right. All right.
Hey,
Thank you.
oh man, bro, go ahead.
already know you roasted your chores.
Ah, you can go.
Now I was about to say like with the funded challenging, bro. I think like, bro, like when I got the phase 2, I started rushing it I started rushing a little bit. And then it got to the point where like I was almost like break even. And then this last week, I basically ran out of time, bro. I mean, like I was just ranging. I would get back even and like, have a bad trade and then lose. I couldn't get the momentum. So I kind of ran out of time, bro. But you know, I mean, I was rushing the process because it got to one point, bro. I was kind of like biting. I was missing out on setups. So I was like, you know, I would take my off the trust or something like that, and it would fly. And I'm like, well, I ain't gonna get in. And it just kept.
I mean, that's the thing about like challenges and stuff. You feel like you gotta, well, now you feel like you gotta pass by a certain amount of days or you don't pass a challenge. You know, that's why challenges make it a little bit more difficult.
Yeah, I mean, but bro, like I've learned to like once you like get in profit to load up and use bigger risks, that's how you pass it. Like you
Yeah,
can't
I mean,
really,
that's typically what I do with challenges and stuff, you know, is once I already, what's it
In
called?
profit.
Once I'm already in profit, I like to leverage my profit as much as possible. So I don't have to get to like my initial balance. I'll do the same thing with my funded, not my funded, but my live accounts too. Once I'm in profit a certain amount, I'll start risking a little bit more, just kind of leveraging my profit.
All right, bro. Quick question on that. Do you do that for the profits for the week or initial profit?
I mean, just profit in general. If I'm up, let's say I deposit 100K, I'm up 20K, I could take a $10,000 risk, no problem. Now, keep in mind, I understand the risk that's involved, but if I'm risking 10 grand, it's I'm looking to make 20, 30, 40 grand, you know? And if that trade hits, I'm up an extra 40 grand. Now, let's say I have 60K in the account, I may risk, I don't know, another 10, maybe 15,000. It ultimately depends on the goal of the account also, you know?
I got you.
Yeah, like if this is just like a normal account that I'm gonna take slow, I'll probably only risk 2-3%. But if it's a challenge account or like an account that I'm just trying to challenge myself, I'll definitely go way more risky. But one thing never changes. I'm only leveraging the profits. Because it's free money.
Yeah, I got you. Cause like now, like when I was doing the challenge and I was down, like when I was almost run out of time, I kind of I risked more.
Yeah.
Because I mean, I was just like I ran out of time, bro. I was like, damn it, and it kind of snuck up on me, you know. But it's all good. I already bought another challenge. I'm about to hop back in it, so I don't take no breaks. We just keep going.
Yeah.
Raul,
What's
question.
good, bro?
What would you say is like the best system for someone who's trading these prop firms to have to be consistently able to pull out profits from these? Is it to go like the more like you know, conservative route and be risking like 1 or 2% per trade, and once they win, maybe
sure.
up at a percentage, or go like full throttle on it?
Thing is, like, if you want to find a sustainable solution, you want to be as conservative as possible. If you're just trying to make a lot of money quick to fund your own account, then, you know, once you're up like 10% on your own funded account, then you could start full throttling it. But then you have the probability of losing. Just keep those things in mind, you know?
Mm-hmm. All right, thanks, man.
Yeah.
Quick question, Raul. Is it recommended to trade DJ? Is there a holiday tomorrow?
I haven't checked news yet. Let me see. I don't see anything about GBP or JPY bank holiday here. So I wouldn't see why not trade. There's USD news though at 8:30.
Okay, thanks.
Definitely not NFP. PPI.
Hey, bro, quick question. Like, if you don't see a setup on your main pair you trade, do you like switch to another pair to see if it's another move?
Yeah, like if I don't see a setup with GJ tonight, I'll look at gold. You know?
Oh, question. I asked for GJ, but do you think gold moves like decent enough in New York to be trading it like consistently?
I think it moves better during New York.
Yeah.
Yeah.
How come you prefer trading in London though, right?
It's just because I trade London.
Oh, okay.
Hey, Raul.
Yeah.
So I saw your example there with GJ when you was explaining your aggressive entry. So I'm more of a conservative trader. Even when I took both trades, but like from one of the trades I got like I wanted to, and the next trade I got like I wanted 3. And I have this fear of, you see, like how that first trade where it didn't reach to the high of the previous white line there at 163,900. Like I was sitting there and I watched it and I was like, you know what, conservative. And I saw you said that you would basically split your trades into one conservative and one a little aggressive according to how the trade pans out. So is it that you would put more lots on the aggressive? So let's say you're risking 1%. Would you risk like 60% of that 1% on the aggressive trade and the rest on the conservative? Or how would you balance that out?
Me personally, like when I trade aggressively, I like to risk a little bit more on my aggressive positions just because I could squeeze out more risk to reward ratio versus on a conservative position. I'm obviously gonna have to use a smaller stop loss. I mean, a smaller lot size because my stop loss is generally bigger.
How does that balance well in terms of profit and loss? Because with the conservative way of trading, for me, is that I lose less, and moving to aggressive, which I should move to because I'm obviously looking towards going towards the traded funded side of things to build capital faster. So does that balance well in terms of profit and loss?
You could try it, but what I find is that sometimes I may get caught in like a liquidity grab, or I may be taken out of the position early because I entered maybe too aggressively. But then when I take another trade, it makes it back plus way more because of the risk reward ratio compensates. I mean, I'll give you the example right here. You're right. So let's say this is a conservative entry, stop loss, let's put the same price, let's do 750, right? That's barely 2 times your risk versus the
So my
aggressive
stop
entry.
loss was way up, was quite to the white line.
So conservative entry, you make 1.5 times your risk. Aggressive is 4 times. So you see what I mean? It does
Yeah.
balance out.
Okay. Okay. Listen, thanks, man. But would you, besides the rejections, like for example, how you had that big rejection from the first trade there, would you look for more like how you had the first rejection and you had that other big rejection? Would you wait for like 2 rejections, or would you what confluences would you look for?
After I've seen this rejection, that's confluence enough for me to take a position here.
Okay. Okay. But what about the first trade?
Here,
Yeah.
it's the concepts are all the same. You know, we have the rejections on the daily time frame. You have this rejection here. You have price pump up. You have price come all the way to the zone. Really, it's just a simplified version. Like then you have the 4-hour rejection, but by then you would have already been in. You know, so it just ultimately depends on the setup of the trade itself.
Okay, understood. Thanks, man.
Jeffrey, you were gone for a while.
I just got home.
Yeah.
I was doing something kind of late.
Oh yeah.
Yeah.
I bet.
How was
So-
the tateo?
Well, it was a pretty crazy weekend.
Oh,
Yeah.